my current funded situation. So in short, I was funded 7 figures, but unfortunately the prop firms I was trading with, they closed down. My Forex funds, there was some good news with them that they actually won that case. So hopefully we do get our funding back, because I had 600k in funding there. I was funded with True Forex Funds and Smart Prop Trader. Those closed down. So since the start-ish of this year, I've been trying to get my funding back. Funded 100k with FTMO. Currently taking another 100k with Funded Next. Both accounts are in some drawdown. So I've been doing a lot of reflecting with my trading, and even though I know I'm a profitable trader, I get into a lot of losing streaks. And I've come to realize that maybe I should limit the number of pairs I'm trading so those losing streaks are not so long, and maybe even risk a little bit more per trade with the instrument I'm trading, if that makes sense. In short, I'm funded 100k currently with FTMO. I plan to take more challenges and increase that funding. On this stream, I'm gonna backtest a bit of AUD USD. So you guys can see the current strategy I'm trading. The theory behind the strategy is I need to see a range, and I need to see a liquidity sweep and then push down. Now again, I personally don't like to just use a liquidity sweep. I want to see it kind of respecting a demand zone, a supply zone, in this case a supply zone. And something I'm going to additionally backtest in this is I'm going to add another confluence. So this is going to be new for me in this backtesting. I need to see it reject a supply zone, demand zone, or it could even reject a fair value gap. So I'm going to add that into this backtesting session. So essentially I need to see a range between the high and the low. I need to see price take out that high. So in this case, the high, so it's a liquidity sweep. And it needs to respect a supply zone in this case, or it can respect a fair value gap. So that's what I'm going to backtest now. So let's make sure it starts. Okay, so we're in Jan. So I keep the strategy very casual. We're currently ranging between this high and this low. So let's see what happens. So it's still currently ranging. And we broke this high over here. I'll mark it out for you guys so you guys can see my thought process. So price broke the high. It took out liquidity. Let me put that in the middle. So it took out liquidity and rejected. Now, with this trading strategy, you could take a trade here, okay, and you can keep your stop loss fixed. I'm going to start keeping it, I'll just keep it at 12, but if it's less than, I'll keep it at 12 or usually above this high, and you target a 1, 2, 3. That's kind of the strategy there, but I want to see some sort of rejection or a supply zone in this case. So over here, you can see some supply is there. So you drag that supply zone here. And it's still respecting it. So I'm happy to take this trade. It's respecting supply. We also have a fair value gap over here. I don't know if you guys can see that, but in this case, I'm going to use the supply zone. It's still technically respecting it. And we've taken out liquidity, and then we're taking the rejection. Now, I'm not taking into consideration market structure, because in this case, market structure for me is still bullish. I don't know if you guys can see that, but in this strategy, in this backtesting session, I'm not taking that into account. I'm just taking into account what I see. It's taking out the range, takes out liquidity, and it's rejected from a supply zone. So I'm going to take this trade. Let's see what happens. Okay. Okay, look at that. Okay, so it literally, you see in the live stream right here. So it literally just took, profit, straight away took our profit, which is great. And then we continue. We're not looking for more profit, we're looking to just continue. Okay, price takes out liquidity here. I don't know if you guys can see that. Taking out liquidity. My backtesting, I've just realized backtesting while streaming, I'm very slow. Usually I'm much faster than this, but I want to explain everything as I go. So, liquidity sweep, and are we respecting anything? We are respecting, I'd like to say this is my demand zone over here. So respecting a demand zone with sweep liquidity, and we've got that bullish rejection. So I do not mind taking a trade here. I'm not taking into consideration what time of the day it is. I'm just going to place these trades. So for me, I will place it just under this low, and I'll go for 1, 2, 3. Okay. So let's see what happens. Okay, it's taking me out. Okay, if you want to see if a candle's... Okay, this is a good tip. If you want to see a candle's bullish or bearish, you can't tell with this doji, right? What you want to do is you want to go to the top left over here, and you can see this, right? It says open, high, low, close. So in this case, if the open is lower than the close, if the open is lower than the close, then you got a bullish candle. So in this case, open is 67291, close is 67294. So this is bullish. So I am going to respect the strategy in this case, and see this is rejecting from a demand zone. Okay, we've got that liquidity sweep. Actually, I don't know if it's the wrong time of day. Yeah, this is not the right time of day to take a trade. Okay, never mind. London time, what it is? What is it? Because I'm so used to London time on my charts. London, what time would it be? 12 p.m. Friday. You know what? I'd still take the trade technically. So, put it back to, yeah. So I would technically still take the trade. It's respecting the demand zone. You got a fair value gap over here as well. But for me, I just want to see where it reacts, right? So it is technically, I don't know if it's invalidated the fair value gap to be fair, but it's respecting a demand zone. It's sweeping liquidity. Yeah, you got a sweep of liquidity. I'm going to add that in there. And you got that doji candle, but it's slightly bullish, so I'm happy to take it. So I've already put that tool. So I'm going to put it. So see, in this case, I don't like to have too much of a small stop loss. I could be a little bit more lenient and give myself that full demand zone. So I'm going to do that, and I'm going to aim for 1, 2, 3 over here. So again, I'm not looking at the whole market structure, even though overall I think we're still bullish, but it's kind of taking that major pullback. So it's either going to break market structure and go bearish, or it's going to pull towards our side. All right, let's take this trade. Oh, look at that. Cool. Okay, brilliant. So it's respected the demand zone, takes out liquidity, and we have a winning trade. So that's great. So I'm not looking for more profit, just wanted that reaction. So let's move on. I am going to take this trade, but I'm going to make sure it's not spread hours, because I'm used to backtesting on the London time zone. I've got to check. Spread hours is between 9 and 11 p.m. London time. So what that essentially means is that spreads widen, and you just don't want to get into positions at that time because you get in at a really bad price. Price can take you out for a loss. So 9 to 11 London time, you don't want to get into the markets. Just keep wary of that. Am I blind? Because I cannot see London. Okay. Okay, it's 9 a.m. Friday London time, so it's not spread hours. Great. So I'm happy to take this trade. I think this is a good trade to take. With ranging, takes out liquidity, got the bearish rejection, and we are rejecting from a supply zone. 1 to 3. I'm going to place my stop loss just above the candle. We'll see what happens. Again, I'm not having the mindset that I need to win this trade. No. I follow my strategy and see what happens. So, let's see. Okay, got a bit of push.
Okay.
This is almost like a set and forget, you know, like I'm not moving my stop loss to break even, not doing any of that. Okay, it takes me out. Now, what would you have done? Okay, this came to 2.66% and came back and took me out. What would you have done in your live trading, and what would you have done in your back testing? Would you be like, actually, I would have taken profit here in real life, so I'm gonna act like that was a winning trade for me? Is that the type of person you are? Is that what you do in your live trading? If you were to take this fixed 1 to 3 risk to reward ratio trade and you are at 2.66 over here, would you just take profit? Well, what would you do there? I'm curious to hear. So we're ranging. You can see between this most recent high, this most recent low. We're ranging. We take out liquidity. We respect the demand zone, and we got a bullish candle confirmation. That's enough confluence for me to take a trade. Let's see what happens. Cool. So I hit and take a profit, which is great. We're respecting this supply over here. We're still respecting it. We got the bearish confirmation there. So what I'll do is I will enter. I could be very cheeky and put like an 8 an 8 pip stop loss, but I think that's being a bit too much. What I'll do, but I also don't want to keep it too high. So what I'll do is I'll find the equilibrium of this. No, I didn't take that. I think in this case I'll just keep it at a fixed 12 pip. If I can get it there. Let's keep it at a fixed 12 pip. And then this will aim for a 1 to 3. So let's see what happens. And also as another confluence, we do have this bit of an ascending nature going on. So we got a lot of liquidity onto here, which we can kind of take. So let's see. Price could easily just take me out though. Saved. But in many cases, spreads might even take me out there. But I take into consideration spreads. Another very important point. When you're taking trades, you got to take into account spreads that will happen. You can't trade it as if you're backtesting. So you got to take into spreads into account. Okay, cool. This has been a very good month. So it takes my profit and actually just shoots right back up. But it took my profit, so 1 to 3. It's a really good trade. Happy with the trade. Liquidity sweep. Then are we respecting any demand zone? We do have a little bit of a push up here, so I'm gonna take this as my demand zone. So we are respecting it. No fair value gaps to respect. And we got that bullish rejection. Let's just make sure it's the right time of day. Meaning right time of day. When I say that, I mean it has to be not spread hours. So let's see, London. It is 9 It's going to be 10 a.m. for London time. So I do not mind taking this. The lower probability setups tend to happen usually on Monday because there's not too much volume. But with this strategy, I'm going to back test, not really looking at the times besides spread hours. And then I'll look at the statistics and then decide what I should do after that. So on this case, I'm going to keep it below the demand zone. Target 1 to 3. And this looks like it might be the last trade for this month and also for this live stream. So let's see what happens. Let's see if we can end up with a winning trade. Let's see what happens. No, we don't. We end up with a losing trade. So, total gain on percent risk. %. Win rate. Let's see the win rate. So we took 1, 2, 3, 4, 5, 6, 7 trades. So 7 trades, winning 1, 2, 3, 4. So 4 out of 7 trades. So this would be considered a good month. This wouldn't be happening every single month. The 4 out of 7 trades is approximately, we'll round down, 57% win rate. So this month of backtesting, we had 7 trades, 7% gain, 57% win rate.